All right, welcome everybody for the fourth installment of our four-part series where we talk about how to personalize your strategy. We talk about options and how to sort of personalize the training that you get, whether you're out there on the web or whether you're behind some kind of a guru like myself or anybody else out there on Twitter, how to personalize your trading experience and create your own style. And today, we have an interesting story here. We have St. Lucci's own Greg Gamba, and he was originally a class member. Actually, he started out as a chat member, took the 12-day course, went through some pretty crazy trading ups and downs, and is now working full-time for us. So everybody, let's welcome Greg. And Greg, why don't you give us a quick rundown here on your background sort of with St. Lucci here.
All right, yeah, so like you said, I started in the chat. I was the guy that got banned just about every day.
Yes, yes. FYI, guys, I would ban him all the time. And why would I ban you? Let's just throw it out there.
Because you and I like to argue. We have an interesting relationship. But so I went from the chat to the course. Obviously, I took the course in January of 13,
Right.
and then I started trading with obviously the tape reading and what was taught to me in the course right away.
Right.
I had been trading prior to that.
Yeah, what was your kind of MO here prior to that? I mean, just a quick synopsis.
So, I mean, I've pretty much been through it all. I started out just buy and hold, and then I went into the penny stocks,
Okay.
which is always an interesting experience. And then I found options.
Okay.
I tried toying around with it. I kind of had an idea of what tape reading was from the penny stocks, because that's kind of the only way that you can really trade those.
Right. The penny stocks. I mean, besides charts, but you're pretty much looking at your level 2. You're still looking for order flow and things like that when you're looking at penny stocks, correct?
Right. So what I would do was I would try and find the people who were.
Pretty sure I'm like wide open tomorrow. So yeah, anytime should work.
Do you hear that?
Yes, I hear Charlie. Okay, let's go ahead. Can you send somebody out to tell Charlie? It's that phone wire, man.
Yeah, hold on. Yo, Brett, can you find Charlie? Because he's on the phone, I guess, right now, and he's knocking into.
Yeah, for sure. I'm finally getting my calendar open real quick. Yeah, dude, I got nothing going on. So.
Right. You know, it would be great if he's talking to his girlfriend.
Whatever, dude. We got free beer on tap.
It would be unbelievable if he's talking to his girlfriend.
You
know what I mean?
Beer on tap.
And then we could totally hear this whole conversation.
Yeah, for sure.
I get the juice that I wanted to get to throw it on him 2 weeks later if I never needed to win an argument. You know what I mean? Right. That was absolutely hilarious. So let's roll into this again because we're going to have to record this again here. Everybody, welcome y'all. We're introducing to you Gregory Gamba, and he is now a St. Lucci employee, intern turned St. Lucci employee. He has his own trading story. He's been with us for about a year and a half now. Is that correct, Greg?
Working here?
Well, no. You started in the chat room.
Yeah, I started in the chat room 2 years ago.
Okay, so 2 years ago, he's been with us for 2 years, and right now he's just told us that he had some trading experience before coming to us in the penny stock world and everything. So after you came to us, what kind of account size were you using, or what kind of account size did you have? And talk to us about your trading sort of swings after you started with us.
So before the swing, when I was in the course itself, I had a $10,000 account.
You had a $10,000 account, okay.
Yeah, that was money left over from obviously being a college student, those expenses, and just money I'd saved from trading penny stocks.
Okay.
In my Zeco account, which Zeco's not even around anymore.
Zeco's not even there anymore. Why did they get bought, right? Did they get bought by Sogo?
No, they got bought out by Trade King.
By Trade King, that's right.
Yeah.
That's right.
So
shitty brokers buy more shitty brokers. Okay,
yeah.
keep going.
with that said, I took the course and I started trading with it immediately. So I took a January course, and obviously February I started trading. March I came back for the March course, and then there was an April or a May course that I took as well.
Okay.
And then,
So you kept coming back to retake the courses, and you just kept making sure that you understood the concepts and things like that, correct?
Yeah, because obviously and those who have been in the course know that you use live information.
Yes.
So the market's always changing. That's something I tell people all the time.
Awesome.
So the live examples really kind of help clarify things that I was having trouble with and all of that.
Awesome.
So then I remember you and I had a conversation one night. I got you on email. Now this is, for those of you who don't know, Lucci never answers his email. That's why if you ever send an email to Lucci, you get a response from me.
Yes, it's true. It's true. It's true. Now, when you send emails to us, you are getting response back from him. All right, unless it's like a personal email that he sends to me and is like, "Yo, hit this dude up." You know what I mean?
So I finally got a hold of him one night, and at the time I had taken money out because I had personal things that I had to cover. So I only had $3,000 to trade with, and I asked him, "What should I do?" And that was kind of the moment where everything got crazy for me. He told me that I should look to go prop. So become a prop trader, take my Series 56.
Which by the way, I can't believe he actually did. I still can't believe that.
So I took my Series 56. I was the kid in the library during finals. Instead of studying for my classes, I was studying for the Series 56. I took it. I passed. To my surprise, I was shocked when I passed. I was like, "There's no way." And then I funded an account with $3,000 at a prop firm that was going to let me trade options.
Okay.
And you know which firm that was, obviously.
Yes. Yes.
But
yes.
So it started out great. This was, mind you, when everything was just going up. So it was kind of like shooting fish in a barrel.
Right, exactly. That was the point at which, remember, like take yourself back to middle of last year, where literally, you take your Netflix, your price lines, and all that kind of stuff. It was literally just, boom, just grab a call at the right time and plug out and do it again and do it again and do it again.
There were days in the chat where I would buy LinkedIn off the open. The calls I bought initially would go off for like 400%.
Right.
And then I'd come back at lunch and roll up 2 strikes, and those calls would go off for 300%.
Juicy, guys. Juice, man. Stuff that you're not seeing right now. Like, we're not seeing that. And for anybody who wants to know why I'm not trading, that's a huge reason. That is a huge reason. Oftentimes you got to know when to step on the gas and when to chill the hell out. So continue here.
Right.
So what were your gains like?
So obviously I started off slow. My risk was terrible though. I would put the entire account in positions, and at the time you could kind of do that with some sort of, not certainty, but you would feel all right about it because everything just kept going higher.
Key point, which I want to bring up in a little bit. So keep going. All
right. So to start the first month, so June, I was averaging like $2,000 a day.
Okay.
It was pretty consistent. Obviously I'd had some down days where, I like to look for the short side, so I like to be ahead of it like you do.
Yes.
At the time, obviously, it was kind of like this where it just wasn't going to happen.
Right.
And then finally you would catch on and just start throwing money at calls for the week, and it paid out.
Okay.
July, I was averaging $4,000 a day when I was right. When I was wrong, and my losses were about the same.
Okay.
So in 2 months and a couple days, the $3,000 was 105.
It was 105,000. So at the peak, you saw your account at 105,000.
Yeah.
And by the way, everybody here, raise your hand if this sounds a little bit familiar and you know where this is going. So let's keep it going here. So at one point, you saw your account at 105,000.
Now remember, this was right around when you had the incident with Amazon. Right, where it kept faking out the highs.
Right.
And you just couldn't get your hands on it. So you had said that you wanted to toy around with selling options.
Yes.
That was when you really started implementing that strategy.
Right.
So me being the person I am and wanting to challenge you,
Right.
I sold Apple puts.
You sold
And
Apple puts. Right.
Yeah, at the time, it was like, well, Apple's not going to go down. Everything's going up.
Yeah, by the way, Apple was dead at this time. Like nobody wanted it, and right, it started to, but it was just in La La Land. It couldn't really get going. So I believe that was the issue.
So hold on, I'm actually going to pull up a chart here just for.
Well, we got the screen
reference.
share here, so let's
All
let's
right,
pull
so
it up
pull
right
Apple,
here. Right.
Like the last week in July.
So last week in July of last year.
Yeah.
Okay. So let's go to this 2-year here. And apologies here for the slowness. Here we go. So we got last 2 weeks here in July is pretty much right around here. I can zoom in here for you too.
Right, and everything just kept going higher. Apple looked good. It looked like it wasn't going to sell anymore. The tape was clean.
Right.
So what ended up happening was I sold a lot for me of Apple puts for that week.
Okay.
And I was 2 strikes out of the money.
Okay.
So I had that. I felt pretty good about it. And then as the second I sold them, all of a sudden you just see someone selling Apple.
Yep.
For like 3 hours, they held the stock down.
Yep.
And
these were weeklies. These were weeklies, correct?
Yeah.
Okay.
Yeah. Okay. So I swear on all things holy that somebody had me pegged. They knew my account. They knew I was leveraged. They knew the accounts coming out of the prop shop.
Right.
And they pegged me. So when they saw me sell, they came after me, and they got me for
what?
$98,400.
$98,000. $98,000. Now here's the one question before we start moving into our content that we want to talk about for the webinar here. The question is that at what point did your instincts kick in and you told yourself, holy shit, I got to get the hell out of this thing before it gets too ugly? Well, at what point did that happen? And then obviously you missed that point, and then it just gutted your whole account. So what point did that happen?
The way it happened was it wasn't aggressive.
Okay.
Right? It's not like they just flushed the stock.
Right. So it was just a slow bleed, though, on your time decay, right?
Right. So what they did was what we're seeing now, where it was just really controlled, and they were walking it down.
Right.
The whole time there was somebody still there buying it. Like the person I saw in the beginning that made me take the trade was still very much there.
Right.
At one point I was down like 140. And
so you were down more. You were down more.
I got 4 margin calls.
Oh, you got the margin call. Shit, I didn't even know this.
And now, mind you, I'm only 22 now. I was 21 at the time, so I had nothing to my name.
Straight up cowboy.
They were telling me that they were going to come after my parents.
Oh.
And they were going to go after my family for the money.
Oh.
And then
and by the way, after that, like, he just disappeared for a while. I'm like, where is this knucklehead that I keep bopping out of my chat room? Like, I miss him. I want to kick him out right now. I need to feel better about myself. Where the fuck is this kid?
So the stock went back up. It headed higher, and I closed the position out for a big loss, obviously.
Right.
And then the second I closed it out, it just went right back up.
Yep. It had that gap up, and then it just went.
Yeah. So
Okay. All right. So what I want to break into now is guys, I want to break into a discussion here about small accounts and large accounts. I mean, everybody comes here and says often to us is that, when they see me plugging around with a 7-figure account, how does it relate to somebody who trades a smaller account? So, Greg, first thing I want to ask you here is after you took that loss, right? You're back in the game now. Right? You have the information that you have, and you've went through the things that you went through. What's going on in your what's going on in your head as far as adapting what you've learned to your next sort of journey here? So you're starting the journey again. I mean, what have you adapted here as far as your personal style and how you're going to go about this time?
So, I mean, me personally, I'm a very aggressive trader.
He's very similar to me.
Right. So I like to throw size around when I can. I like to put as much of my account in the position as I can, obviously when I know that I'm right and things are going in my direction. With that said, having the opportunity to be around Brian and Ezra and talk to Haim, I kind of want to learn that side of things a little bit more.
Okay.
because I have this vision in my head of merging what you've taught me.
Right.
All right, goodbye. And that's Brian leaving. What you've taught me, and then merge what Brian's kind of explained to me, and obviously Brian's got his class coming out in the next couple of weeks to a month.
Right. FYI, guys, Brian Weiner is now a sort of portfolio manager for a group of funds that we are starting at St. Lucci. He's also a former pit trader, and his sort of vision on options is from the market maker perspective. All right, so it's a much different way of looking at options than I do, and he's coming on board to teach some classes. He also teaches, by the way, a class in the 12-day course, which we have, which I teach right now. So strategies there, as well as Ezra is an HFT guy that we brought on to also run a smaller portion of a fund. And then obviously Chaim Bodik, which you guys all know, who's been in documentaries and outspoken against a lot of HFT practices out there. So there's a lot of new education that's coming into the mix that Greg wants to put together and create sort of a new strategy for himself. So that's great. How's that sort of working out? Do you feel like it's a slow process?
The foundation of what I trade off of is obviously the tape. So for me, improving that, and obviously I continue to watch the boot camp just because the new examples, and now that you're gone, like by gone I mean not physically 5 feet away from me, I kind of need to watch that to see what's going on in your head.
Okay.
But so that's my foundation, and then obviously the hedging and learning more about the Greeks and how I can utilize that. Okay. And then I feel like the combination of the two is like a perfect symphony.
Okay.
Where you can read the tape and obviously gauge short term where the stock's going to go, and then use the Greek strategy to capitalize on that in that way.
Right, and to help you out with entries and exits and things like that. Good places to buy volatility versus places, you know what I mean, time decay and stuff like that.
The volatility, the premium spikes and obviously the premium dumps through volatility is something that I struggle with emotional understanding.
Absolutely. And by the way, retail out there, and by the way, this is something that most retail has issues with. How many of you guys have been in an option and you've got a huge vol spike, and what we mean by volatility spike is that all of a sudden your option goes from $1 to, let's say, $3, and you don't sell up there at that $3 or $4 or wherever that volatility spike gets you, and all of a sudden it just comes right back up, right? Yeah. So this usually happens with most retail traders, right? And market makers look at this as an opportunity. They see the vol spike, and they come in and they sell it, right? They come in, these are automated strategies. They come in and they sell the shit out of it. And then you sort of get that mean reversion trade. And so this happens quite often.
The other thing is the guys who are trading on Thinkorswim, and I'm a huge fan of the Thinkorswim platform, you're not getting to see everything that's going on.
No.
So
that's true.
I've learned this because I'm on Interactive Brokers now.
Okay, yeah.
Thinkorswim only shows you, if I were close to 50% of what the actual bid and offer is.
Right.
So now that's a huge difference because what you're thinking is a refreshing buyer or seller is really just actual size that you can't see.
Right. So what he's alluding to, for a lot of the retail guys out there who let's say broker with E-Trade and things like that, is that you don't even have the market access that a lot of other folks have, especially market makers. So you're talking about being able to see liquidity on exchanges, and meanwhile you don't even know that shit exists. You don't even know it's there. So it's a big disadvantage when you're trying to trade aggressively, like Greg and myself are. All right? So let's move over to a new topic here, and then Greg's going to ask me a couple of questions. Let's talk about large accounts versus smaller accounts here. What's the psychology of trading the smaller accounts as it pertains to options? I mean, why do you feel like options and the tape reading kind of thing is the best way for you to go about trading that $5,000 account? You know what I mean?
Obviously the leverage plays a huge factor in it. So, I mean, obviously I can't buy 1,000 shares of an Apple or a Google, but I mean, on a Thursday, Friday, I can buy 10 contracts, which is equivalent to 1,000 share underlying.
Right.
So that's a huge part of it. The other part, for me personally, is I love the swings. So I like the volatility because of the leverage.
Right.
When you're right by a wide margin.
Right.
And then on the other side, when you're wrong, it gets hairy pretty quick.
Right.
You
right.
know? So,
Absolutely. So let's talk a little bit about that side of it. You know, I remember you expressing to me some issues about small accounts and the risk side of things. So if you are wrong on it, you don't really have as much space to move around as somebody who has a 7-figure account. So how do you deal with that?
Well, I mean, as much as we all want to say it's all relative, I mean, 20% is 20%. Mentally, it's really not. So if you're in $100,000,
it doesn't work like that at all. Like, I love when people tell me that. Like, it's all relative, dude. Like, if you make money with a $5,000 account and you make X, Y, and Z, all you got to do is double your size, triple your size, and bam, you good. Like, this shit does not work like that.
If you lose $20,000 or 20% in a $5,000 account, you're at $4 grand.
Right.
If you lose 20% in a $100,000 account, you're at 80 grand.
Right.
What's easier to trade yourself out of?
Exactly.
You know what I mean?
Exactly.
On the mental side of things, losses are hard. I mean, obviously, pitching around 5 lots is what I did to start when I first got back.
Right.
And realistically, that's not fun.
Right.
I mean, you remember, over the summer, I was throwing around 100 lots, 200 lots.
I remember. You guys, I would be at the loft, and I'd be like, yo, Greg, what are you doing? And he'd be like, I got a 300 lot. I'm like, what? You got 300 contracts on? Who the hell you think you are? You think you're me?
We used to, for those of you who aren't in the chat or weren't in the chat at the time, Lucci and I used to make a lunch bet every day on what the SPY was going to close at.
Yeah.
And God forbid I ever won. He would call me the next day asking me what I want for lunch, and I would tell him I don't want anything. I just wanted to beat you.
Right. Literally, we would make bets. Like, when you make a bet with me, I come through on that bet. I'm calling you like, yo, what do you want?
And now it's like I'm sitting with a 5 lot, and I'm pacing back and forth around the room like, what's the SPY going to do now? So it's a big change.
So you have some questions for me. Let's open those up, and then guys, anybody who has some questions here for Greg or myself, let's open those up as well. So Greg, you first, man.
All right, 1 second. Let me just pull this back up here because you had me delete it. All right, so obviously the whole P&L thing on Twitter, we get a lot of people that come at you, and since I've been associated with the brand, I get my name tossed in there. But what I want to know, because I know it affects me, but how does that affect you? Do you think that you kind of chase after these monster trades in a way to shut them up?
You know what? So it's a lot of self-reflection, and you never get over it either. You know, Twitter is something where they love you when you're hot, man, and when you're down, everybody wants to beat the shit out of you. And if it's cool to do so, then everybody else is going to start doing it. So people that you thought were in your corner, they no longer are in your corner anymore, and they just want to beat the shit out of you too. So it takes a certain level of sort of the hardened skin. But even then, like, you know, anybody who goes through a losing streak and he does it publicly, he still has to go through it and then has the sort of doubling effect of having to look at it on Twitter. Like, you already know you're a dumbass here. You lost $500,000. Now I got to go on Twitter and see people laughing at me and calling me all this kind of stuff because I lost $500,000.
My Amazon trade.
Right, and you know, I mean, it's a part of the game. I do this all the time. You know it. Everybody else around me knows it. I've done this all the time, and I've come back and made $2 million. You know, so do I think it's a big deal? At the end of the day, no. But does it take me a while to get to the point where I don't think it's a big deal? Yes. So there is like a sort of depression sulking period that I have to get over, and then finally just rub it off here and force myself not to get into battles with everybody on Twitter because it's useless. It's useless. Well, like once you accept the trials of the game, you know, that's really all you need to take care of. But again, anybody who's on Twitter doing it publicly, like, that's what we do, man. That's what we do. And everybody wants to say something, and all they're doing is sitting at their computers typing it, you know? If you were right next to me, like, you wouldn't tell me you know what I mean? You wouldn't tell me I'm a dumbass here. But on your computer, the things you can get away with saying, It's
No.
sky's about, you know.
Absolutely. So, I mean, this kind of transitions into my next question, which is the challenges of trading with such a large account. I mean,
Okay.
obviously, I've seen people call you nuts for trying to buy 1,000 contracts of weekly strikes
Right.
and options. So,
Right.
what is the hardest part for you
Right.
about trading so many contracts? I mean, such a big account.
It's the new ceiling every time. Like I always hit a new ceiling every time. Like we started with a couple hundred grand. We
Right.
started with a couple hundred grand, and then we grew it to 2 million bucks. And through every one of those stages, 250. Let's say I would get to 500. Let's say I would get to 750. There would be like a mental psychological thing for each one of those levels. And there would be something that I had to do to break through that level. I would sit there for like 3 or 4 months, go through ups and downs, and then finally just shoot through that level. And now we're kind of stuck at this $2 million area, and then, a lot of the juice is drying up around here, and it's difficult, man. There's a big mental block at some, of these psychological numbers that you just kind of throw in your head, and they just kind of hold you down. As far as trading the contracts, yeah, man. I mean, anytime I pick up 1,000 contracts of something, people are on me. Everybody is on me. And when I say people, I mean market makers. I mean algos. I mean guys who think there's edge in my flow. And there's plenty of edge in my flow because I'm going for directional. So I'll hop through a spread. So there's plenty of edge for people to make money off of me. So they love it. They love it. They can't wait to see me again because they know there's money in it for them.
It's funny because now you have Brian, who
Right.
you're mic'd up with all day, every
Right.
day,
Right.
and that's what he does.
Right.
So
Right.
he looks for guys like you.
Exactly. Essentially,
to
he's
sell
looking
to.
for at a much sort of out of the money perspective. Like he's looking at penny options and things like that,
Right.
stuff that he can sort of make guaranteed, no risk kind of money on. But absolutely, him as the way he thinks, he's a vol guy, so he waits for that vol to come in, and he sells it to everybody. And meanwhile, the rest of the retail world is trying to buy that volatility, because they think it's going to take them to the freaking heavens. And most of the time, where does it take them? You know where it takes them. You know off the bat, where does it take them,
Yeah.
So the pitfalls, I would say, with trading a large account is there's pressure, man. There's a lot of pressure. There's a lot of pressure in watching everybody react to what you're doing. There's a lot of pressure, to keep performing as you grow the account too. So to have, let's say, 100% year on a $2 million account versus a $200,000 account, it's a lot more. It's a lot tougher. It's a lot tougher. I can't double and triple a $2 million account as easy as I can a $200,000 account. Is it possible? Yes. Have I figured it out? No, not yet. Not
On the
yet.
way.
Not yet.
And then, all right, my last question, and this is something you and I have talked about in the past. You remember the turtle trading experiment?
Okay.
And
Yeah.
for those of you who don't know what that is, Google turtle trading experiment when you
Right.
get a chance.
Right.
But basically, it's the premise that some people are born traders while others learn the quality that makes them a great trader. So do you think that you were born a great trader, or you learned to become one?
No. I think I learned to become one, and I personally think that any good trader who learns to become one, like, we can be good at anything. Yo, you remember Blow? You've seen the movie Blow, right? I
Yeah.
mean, you're not that old. You're not that young that you haven't seen it, right?
Yeah.
So you remember when his pops, his pops came to the new house, the big house, and he had all those cars outside, right? And they having a cocktail, and what was his name? Johnny? What the hell was his name? George? His name was George. And George was like, I love what I do and this and that. And his pops was like, you could have been great at anything, right? So people like myself, I could have been a great tennis player. I could have been a great, I could have been a great doctor. I could have been a great this, that, or whatever. Like, it's the mental fortitude of people like myself. You just go here, you have an idea, and you just go. So whether it's a small business or whatever it is, you put your heart in it, and you get what comes out. I could have been great at anything. So, I don't look at it as, I was born to do this. And frankly, eventually here, I don't want to be doing this for the rest of my life. I'm looking for that payday. I'm looking for that freedom so I can travel the world, I can enjoy myself, and I can indulge myself in all my other hobbies and,
Sponsor
all
an
that
F1
kind of
team.
stuff. Start an F1 team, and then, of course, there's women, and, and then the list goes on and on and on.
That's a whole nother webinar.
That's a whole nother webinar. All right, so let's take a couple of questions from these guys. There's a couple of great questions here. There's ones that I really want to talk about, and this one in particular from CKIP here. He says, but does your style lead to students getting beat up trying to do what you do? And it's a valid point. And in essence, there's a little bit of, there's a little bit of antagonism here going on in the question. What do you think about that? I mean, you are a student, right? You're a student. I've had other students come on. We've done a webinar with Nate. What do you think about that?
I mean, I don't think that what you teach and obviously the way the boot camp is set up, that it pushes across how you trade.
Right.
Obviously, tape reading is a method in and of itself. So the way I felt was I learned how to tape read, and then from there I was able to kind of morph it into what I wanted to do. Right. I'm an aggressive person. I mean, you know that. I'm pretty aggressive with everything I do, and that comes out in my trading.
Absolutely.
I mean, I have other people who have taken the course that I know that are friends of mine that are much more passive and like to pitch around 1, 2, 3 contracts at a time over longer time periods. It's one of those things where you get to choose what you want to do.
Right. And CKIP, I'm going to go ahead and answer this question as well. The reason why, number one, you're asking this question, and the reason why, it's sort of a go-to question here, is because I am in the position where I'm a guru, right? I'm a teacher. So I'm sort of the influencer in this kind of scenario, right? Therefore, just on the strength of that, people are going to gravitate to what I am doing. People are going to want to gravitate to how I trade. Now, CKIP, anybody who has taken my class, and by the way, there's people here who have taken my class. We got Rob here who says anyone who tries to imitate Lucci hasn't taken the boot camp classes.
Exactly.
And the point is that if you take this class, I literally outspokenly say to anybody who takes it, is that, listen, this is what I do. Like, this is what I do. I am here to give you the information. You're going to take this information and do whatever the fuck you want to do with it. That's essentially how I come off in my class, in anybody I talk to, in the chat rooms as well. So if you gravitate towards doing something like I do, and I'm not sending you an alert, I'm not doing any of that, that's your problem. It's always been your problem. So that's not on me. You can't, I'm not going to allow people to put that on me because it's useless for me. I have a $2 million account that I need to trade, all right? I'm not trading for everybody else. I'm not making sure that my chat room members are plugging out and making $1 million. I got my own freaking problems to deal with. That's the point, right? But I can give you the information to build your own style and your strategy. And through that, I've had much success with many students, who've gone on to do really well. So let's take another couple questions here. Andre is saying, Lucci, when are you going to move into future options? Again, once I'm done with what I'm going after, that's when I'm going to go through it. Chad is saying, how do you reinforce the discipline of not looking at your P&L swings? And by the way, Greg, he's talking about you. Yeah. Not looking at your P&L swings during and after big ups and downs like you've been through to limit anxiety with wanting to sort of make it all back, right? Chad, that's a great question, right? You want to make all that back because you got hurt so much, so you need to obtain this number to make you feel better. So he's saying, how do you deal with that? How do you limit that anxiety?
So me personally, this is actually going to sound really stupid. The way I limit my anxiety when I trade is two-part. I have these, what's it called, little stress balls that I chuck around the office at mostly Charlie and Roy, and then I color. So, yeah, no, I'm really not. I'm not kidding. I color, like I doodle, stuff like that. I feel like having those numbers, though, it's a natural thing. I mean, everybody looks at the possibilities. You can make infinite amounts of money and be self-sufficient and all that, and you're drawn into that. That's why we're all here. That's why there's 100 and some odd people watching this webinar right now, because of the money, right?
Right.
So I don't look at it as I'm trying to chase back what I've lost, because realistically, whether I lose 500 or 5,000, I'm still going to play with the same size when I can, like when the market obviously allows me to do so. It's just a matter of if I'm right or if I'm wrong. I mean, there are definitely times, like my Amazon trade, where things just don't go right, and then you need to take a step back. For those of you who don't know, my Amazon trade, I was up $4,000 on the position. I rolled up 2 strikes higher. The stock looked like it was just going to rip, and then I ended up closing both positions. I was up $900.
Right. Everybody wants to know. By the way, everybody wants to know like how you've done thus far. So you started with 5,000. You're at around like $7,000, right?
Yeah. So I started with 5. I hit a high of 14.
Okay.
And then I'm at 7.8 now.
Okay. All right. So I mean, punting around here, until you can figure it out.
But this is
it's
the same crap I went through last year. I mean, the punting period is very much a natural phenomenon. I feel like.
Absolutely.
You kind of pitch back and forth, and you're crawling around until you finally figure it out and get it back, and it just starts stringing itself together.
Absolutely. And by the way, like I can't teach that. You know what I'm saying? Like that's one thing that I cannot teach. And this is why alerts don't really work to me. And this is why blindly following a guru here does not work. This is why you need to personalize your strategy, right? So I'm not out there pitching a strategy. That's not what I do. I am out there to give you the foundation to build the strategy from. All right? I'm not telling you what to do, nor do I give a shit what you do. All right? That's not my problem. I got my own problems. And Greg has now sort of went through what he needs to go through to come back at it again. Do you think, how do you think, oh, by the way, like, Zach Musso here has a great question here. Let's holler at Zach. Zachary Musso was a previous intern for us. Greg, you had something to say?
Yeah, just real quick. I feel like everyone says the big loss is such a horrible thing, and I get a lot of interesting hate mail because of it and how I've been so open about it.
Not even close to what I get, man. What I get is absurd.
All right, well, I was an unknown before this.
Indeed.
Everyone that I know that's in the market, and by this I mean I know guys who work at Goldman, I know guys that work at JPM and firms like that. Everyone says without a doubt that if you don't take at least one big hit, then you're not doing it. Like, it's a rite of passage almost, and it's the worst part about this, but it is what it is. You take it, you move on. So that's what we're doing.
Julian, hate mail for doing what we do, man. We get it all the time. Like, dude, I get YouTube nonsense. I get Twitter nonsense. I get all kinds of haters everywhere. So Zachary is saying, Greg, nice seeing you on the interview spot. Bring yourself back to when I interviewed Lucci on the Amazon trade. You remember that video, Greg?
Yes, very much so.
Guys, everybody, I was up $600,000 in Amazon. I was up $600,000 in Amazon. My new intern, Zachary Musso here from Bentley, he was sitting right behind me. He was sitting right behind me looking at the whole thing. I mean, he knew not to say a fucking word, right? He knew not to say anything. Props to you, by the way. I was expecting you to start yelling over my shoulder, and I thought I was going to have to come back and pop you one in the face. So I was up $600,000. I was up $600,000, and I watched it go down to literally negative territory, and I think I ended up the day maybe up $100,000 or something like that. It was the most unreal swing, that I've taken in a while, and it's something that I've been working on since, and I still haven't even got over. So he was saying, I know what was going on through my mind, sitting right behind Lucci. He's asking what has gone on through yours when you see me go through some of the big swings.
So obviously, I mean, it's different now that or when I was physically next to you.
Right.
I remember the Amazon trade pretty vividly because I got kicked out of the chat that day. Because when you were up, there was a point when you were up 500,000.
Right.
I was in all caps screaming, "Sell it."
Sell it. Yeah, he was.
And you told me to shut up, and then you kicked me out, and then I saw on Twitter, like 2 hours later, you were down like $50,000.
Oh, it was
and
bad.
I was laughing hysterically, and then all of a sudden you closed it and you were up like 200 or whatever. The big P&L swings, it's funny, but like I see it. Like, so I see how it affects you, and obviously I try not to talk to you when you get like that.
Right.
I mean, this takes a lot out of you. I mean, at the end of the day, you're exhausted
Yeah.
just from trading, whether you're making money or not.
Right.
And that's just kind of how this is. And
Absolutely.
as a trader, I know that, but at the
Right.
same time, there's stuff where I have to talk to you about. So I kind of
this is sort of the trader etiquette. You know what I'm saying? Like by the way, like I don't let just anybody in my private chat room. Like nobody gets in there unless I know about it, or you know they're in for a month on a boot camp or something like that. Nobody gets in there. Why? Because I don't want riffraff. Like I don't want people who are just going to sit there and talk, and I don't want the newbies. I really don't want any of that in there. Why? Because like there's an etiquette to trading, you know, and most newbies have no clue have no clue what it is, and they're just fucking annoying. So I push them all in a basic chat room. You know, everybody gets the same content and everything, but again, like I value my sort of private space. And some of these newbies who sit there and talk about dojis and technicals like they just read it out of a book, I can't do it. I can't do it.
Well, that's the other thing. And when I talk to people, I kind of hit on that a lot. Is a lot of people don't realize that the tape. So what guys like you and I, and obviously the people who've taken the course trade off of, the tape is the underlying for all of that. So you can't have a doji if you don't have the tape. You can't have the bullish engulfing flower candle.
Right.
If you don't have the tape.
Right.
So we just cut out the middleman and go straight to the supplier.
And go straight to buyers and sellers. All right.
All
right. Greg, let's take one more question and then let's call it, man. It's up to you, man. Francisco here. God, you know, Francisco is one of the most annoying people.
Nah.
All right. I'm gonna throw it out here. Francisco.
He sends me the best tweets, pictures ever. It makes my day.
I swear, this guy asked the same question. By the way, Francisco, I've seen the same question over and over, and I've purposely not responded simply because you're doing that. He's saying, what size account are you trading right now? Right now, it's about 1.4. It was 2 million. Right now, it's about 1.4. And please, if you ask that question again, I'm going to start banning you. I'm going to start banning you from some shit. Greg, why don't you take a...
Yeah, so Gun Guy, great name by the way, asked, what stocks do you play and what contract sizes do you put on a typical day? I hear all the time how one should never put 1% of their own account on a trade at any given point in time, pretty much. So me personally, I trade the high flyers for the most part, the Apples, Googles, Netflix, Bank of Americas, the social media names, and a couple agriculture stocks.
Okay.
The whole 1% thing, I think, is bullshit.
Okay.
Because if you're in a 5K account, what's 1%?
Right. Right.
$50. What are you going to do with $50?
Right.
You know, so what it comes down to is, me personally, if I don't feel 100% confident about it, I'll throw in a one lot.
Right.
I can stomach losing $30. Like
exactly, I'll do that too. Like there's a huge aspect to feeler trades that is very important to encompass, especially for the smaller accounts. You know, you don't have to go full swing. You know, if you're trying to take a 20% position here, just plug around here a little bit. Just throw in one lot, test it out a little bit, check your tape out, and then come in with that full bang. You know, I mean, again, most of you guys are wrestling with that PDT. The PDT sucks. I agree. You know, but it's the rite of passage. You know, you got to turn your 5,000 into 25,000 so you don't have to deal with that PDT. All right?
Yeah. So, I mean, the 1%, don't stick to it unless obviously you have money that you can swing around. So. Right.
All right, guys. Again, just to recap everything that we're trying to portray here is that, number one, like large accounts, even though I'm trading a large account, you know, the way I teach the foundational skills of tape reading, they do apply completely to those folks with smaller accounts. Remember, I started with $5,000 too, and I'm here now, still trying to get higher. It's still trying to get better and better. So the idea, again, personalize your strategy, you know, and take that information and sort of construct a strategy around your personality. Greg's pretty crazy, just like me. You know, we have a lot of other traders that are very low risk, so they want to sell credit spreads. You know, they want to do a lot of other sneaky sort of complex option strategies to mitigate some of their risk. These are all things that you can do. Shout out here, we have our class, 14-day class starting next Monday. You guys can get all the information about that. If we didn't answer any of your questions, we're going to record these, and we'll try to get these. Back to you. If we don't get them back to you, though, email Lucci at sayinglucci.com, and we'll hit you guys up. Thanks, Greg, for joining, man. And dude, I'll I'm going to harass you tomorrow anyway, man. I'll see you.
Yeah.
All right, everybody. Take care. Have a good evening.